So again, the three phases, right, of a bull market typically, right, is that you have the accumulation phase, and now I was giving the example of the bandwagon phase. So now you got the bandwagon, they're already on board, right? So they're telling, they're drumming up sales, right? They're getting people to buy. Because if you think about it, right, like in the market, for every purchase, there's a sale. For every bid, there's an ask, right? So if they've accumulated a lot of securities at this low price, right? They start distributing that accumulation, trying to get a capital gains. They get a capital gains, right? Then they may pull back, buy some more, get some more capital gains. So all this, they're going to distribute along the way as this market is going up. They're going to distribute it, okay? And then what happens, right, if you think, again, going back to the idea of the bandwagon, right, they get everybody, my Mac is about to die right here too, 10 minutes, okay? But if the bandwagon is going up, right, or, they got more and more people coming onto the bandwagon, by the time we get up here, this is pretty much the retail crowd. This is the crowd that really doesn't know anything. These are the speculators. These are the people who have FOMO, fear of missing out, right? And then they get in, and generally they get crushed, right? So the significance of and it typically happens. I remember it happening to myself, right? I remember that as a, I wasn't really, I think about it in the dot-com era, right? I was not paying attention. I was kind of like, again, I wasn't really paying attention to the stock market. I was a state employee. I was working on the, I was working as a college professor, and I had one of my students in 1999. He was telling me, "Hey Doc, you need to get into this market, right?" And I was like, "No, I'm not really interested in it." And he had bought some penny stock that was at a nickel at the time he was telling it to me. I think it was like in the fall of '99, and then in the let's say it was September. Then in October, November, it went from a nickel up to about 50 cents. Then it went from 50 cents to $1. It went from $1 to $5, and it reached $5. And I was starting to pay attention, right? And so again, you have the accumulation phase. It's going up here. It's like I'm starting to pay attention, right? I really wasn't getting into it, right? And then in the early part of 2020, those of you remember that Y2K, there was all this big fear, right? 2020, the world did not end, and the market just continued to go up, right? And this particular stock, there was a couple of stocks, right? Penny stocks, they had gone from a nickel up to $1, $5. It was up to $10. It went up to $15. It went up to $20, and then at $20, I was really paying attention. I was like, okay, maybe I need to try to get into this market. And I was seeing that even my retirement fund, right, without any effort on my own, is just the fact that I had put money into the fund, that was growing. And I was like, okay, well, maybe there's something about this, right? And I remember here in Buffalo, they had a TD Ameritrade account in downtown on Main Street. So I got one of my friends. We went down there and we bought some of this stock. Right, and what was real interesting, I bought the stock in the morning. I bought the stock at $26. I bought it right here. Right, I bought it at $26. By that afternoon, right, this is what happened. Right, it started going like this, boom, boom, boom. Right, and it was just like, so I was, again, they talk about trading in the market, the idea of the greater fool theory, right? Well, in that first experience of me trading in the market and inviting a friend to trade. And again, remember, this is this is not financial advice. This is literacy. This is economic and financial literacy. But again, now that I look back on it, what actually happened, right? What actually happened was that the market was going up through the late 1990s, right? And then people were getting in, and then there was this fear of missing out, and then people who was totally ignorant, right? Which I was, right? Totally ignorant got into the market, and we were the ones left holding the bag, right? Right, that's what happened, right? We were left holding the bag, and the market went down, and then I was trying to get out of the market, right. And it was just crazy. But what I decided is that I'm never going to let that happen again, and that's when I started studying technical analysis. Started teaching it at Buffalo State University, and I've been at this for 2 decades now. Okay, but what I do see happening, and I've seen it happen in 2008. I saw it happen in 2020. I saw it happen in 2011. Right, that again, there's this accumulation phase. Right, and then you have more people getting in this phase here, and then the greater fool, right, it was that last phase, and then it collapsed, right? So pretty much, like if those of you are paying attention to Bitcoin, right, during that time period, Bitcoin went from about $3,000 all the way up to about $60,000, right? And then again, that's what it was, $60,000, and the $60,000 reversed, and it reversed all the way back to 16. Now, that being said, that was the bull market, accumulation phase, right, the retail phase, and then finally this last phase, the phase of excess, and that's the bull market.